Sen is also with us. Probal, great to have you on the show. Good morning and happy Friday to you. So first, just a quick top-down view. This fall that we've seen in crude oil prices, I mean, that's obviously making everybody sit up and take notice because it's a pretty substantial one. We don't know if it's going to last or whether there's a quick bounce, but for the time being, how do you distill this down to some of the large listed companies, whether it's the refiners like Reliance or BPCL, IOC on one side or an ONGC? Let's start with the refiners. What immediate impact do you see on GRMs, if at all?
There are two sides to this for the Indian players. One is obviously, as you said, refining. We have seen that spreads have pulled back a little bit. Specifically in gasoline, spreads have pulled back a bit. Diesel spreads have also cooled off a little bit because obviously when this crude decline is being actually led by concerns on demand rather than any supply issues, and that's important to remember that GRM start to get impacted when demand-led concerns actually lead to a decline in crude. And that is something that we are seeing happening. So for GRMs, it's obviously a little bit of a negative. Having said that, the decline has been more from the January levels to March. If we look at average Singapore GRMs, they are still sustaining at close to $7. This is in comparison to about 5.9, I believe, was the average for Q3. So on a QOQ level, while there has been a decline on a month-on-month basis, the overall trend is still marginally positive. Diesel spreads and gasoline spreads being a little bit off hurts the Indian refiners a bit more because the weightage of those two products is obviously the highest for most Indian refiners. On the other side, this decline is extremely positive for the OMC's marketing business. We know that price hikes have been held up for a fairly long time, and now finally, despite no changes in prices, what is now happening is that retail margins have actually improved substantially from a blended level of around, I think, 1.6 rupees of losses in the last quarter. We are now trending at more than 3.5 rupees of net positive margins on the transportation fuel, which is petrol and diesel. So to that extent, and that is something that you are seeing reflecting in the way OMCs have behaved, because the strength of the marketing segment is something that always drives stocks for OMCs much more than whatever is happening in refining. So that's on the downstream space, the way we see it.
So, Probal, just to follow up, what you're saying is really interesting. For at least IOC, BPCL, HPCL, is this event then net neutral? Because they're making up on the marketing side what perhaps they're losing on the spread side with the refining margins coming under some pressure. So net-net, is it neutral for the stocks?
For IOCL and BPCL, perhaps not, because the refining to marketing ratio for IOCL and BPCL is a bit higher. IOCL is almost at about 0.9 refining throughput to marketing volumes. So for them, the refining loss is a marginal negative as of now. For HPCL, clearly it's a positive because the over-dependence on marketing, which hurt them earlier when the losses were higher, and even though GRMs were performing very well, now that completely turns around. And our sense is that the net impact, if you only look at petrol and diesel, the marketing impact versus the impact of what has happened to spreads. For HPCL, it's still a net positive. For IOCL and BPCL, it's a marginal negative as of now. Obviously, that can keep changing if GRMs normalize. But as of now, I would say that it's a marginal negative on the margins front.
Okay, got that. We'll leave it there. Thanks very much, Probal. Appreciate you joining in and running us through what you're making of things. So quick conversation there with Probal on what's happening with the oil prices and the consequent impact on oil marketing companies and, of course, on Reliance Industries as well. So let's just have the SGX up for a quick bid. And I'm not sure if you have the graphics with us, but the pre-open is up about 0.75%, 126 points higher. So this is a good start. Now, we had Danielle in the morning with us who was basically talking to us about, she mentioned a couple of figures. She basically said that this was data released after US market hours, which shows some caution, which would warrant some caution. So I decided to kind of just look into this. So basically, there are two data points which you need to know.